Welcome back, guys. So, on Monday, we took a look at what periodic inventory is, okay? It's where when we keep track of our inventory, we don't keep track of it often, right? Or we keep track of it every so often, occasionally, every once in a while, okay? So now I'm going to be talking about how we actually calculate how much it's going to cost for us to sell our inventory, okay? So let's take a look at the costing methods, okay? When we purchase our inventory items, right, we figured out how much it's the total cost for the asset or for the inventory items to even arrive at the store, right? So that can include the original selling price, right? With shipping, with all those kind of costs, right? As a business, the goal is you do not want to be pocketing out these extra costs. What you're going to do is when you create your selling price, okay, you're going to figure out how much that overall cost of getting those items to your store, right? Because you, at the end of the day, want to make sure that when you sell your products, you make the customer pay for all the costs it takes in order to obtain that item. So for example, right, if it cost you $100 for shipping, right, you're going to take that $100 shipping and you're going to put it into the product. So then you're going to make your customers pay for not only the selling price, you're going to make them pay for the shipping, and you're going to make them pay for any extra cost it takes, as well as a small profit percentage, because again, your goal is you buy your products cheap, right? And your ultimate goal is you either add something special to it and resell it for a higher price to make a profit. Now, with that being said, we need to start calculating, okay? There are a total of 3 methods that we will learn in this class on how to calculate those types of inventory, okay? And I'll go ahead and talk about each and every single one. Okay? So first one we're going to talk about is going to be called Fifo, which is the first in, first out rule or method, okay? So this one is definitely typical for any kind of grocery stores that sell perishable goods, okay? Or packaged foods, okay? Because they all have one thing in common. They all have an expiration date. Okay, so that's a key factor, right? You always will find on the shelf that anything that has a stock life that can last a little longer usually are stacked in the back, and anything that are going to be expiring soon would be more likely to be placed in front. And that's called the FIFO method, meaning the first batch of products that you purchase, right, are typically going to be your first items that you're going to be selling out first. So a great example is going to be something like milk, right? Milk has an expiration date, right? And usually you buy milk maybe every once a week, right? Because that's just how milk, it's one of those products that a lot of people need. So oftentimes what happens is that you buy them in batches. Typically you buy them in batches, and each batch that you buy, they have an expiration date. So maybe it's if I buy it now, right, the next expiration date's going to be September 1st. And the next batch of inventory I buy, right, next batch of milk I buy, the expiration date's going to be now September 11. So something like that, that is going to be why you would definitely want to sell your older milk first, because if you don't, they're going to end up rotting in the back, and then you end up losing out on that opportunity for profit. Now, of course, some grocery stores, right, obviously, customers, they can, pick the ones that's in the back to try to get the most long lasting. That's whatever, right? But as long as you set it the way where you're trying to get rid of the first batch that you purchase, that's the ultimate goal, is to try to go in order by ordering things, and by expiration date, you already know that you cannot leave it on the shelf for that long, and you have to get rid of the first batches first. So same thing with any fresh produce, right? Usually your first batches, like after a week, the produce goes bad. So you want to make sure that this kind of inventory method of calculating is going to be, more best fit for things that are grocery stores or that have a lifespan or expiration date. Okay. The second type of calculation is going to be last in, first out. Last in, first out, meaning that when you purchase your batches of inventory, right? Generally, your last batches are typically going to sell out first, okay? So in this case, right, a great example is going to be a cell phone store, okay? So usually the latest models, when you put them out in the market, those ones are going to be actually, sold out first, okay? Especially because we live in a society where the latest and the greatest is usually the best thing that you want. However, you're still selling your older phones, right? So I think right now, the iPhone 12, right? The new one for iPhone 13 is coming out soon. People are going to buy the iPhone 13 when it comes out. Well, your iPhone 12s are still going to be there. They're still going to be sold somehow. But generally, people are more likely to buy the later model and the greater model first. Okay, so think of it that way. So anything that has technology, lifespan doesn't really matter in this case, right? In this case, it's understanding that whatever batch that you purchase last usually typically gets sold first. Okay? And then the last one that we're going to be teaching today in this class, class is going to be weighted average / moving average. Now, this is where, for this one, where we don't really care which batch came first or which batch came last. We kind of want to get a general idea or general lump sum. And what we're going to do is we're going to take an average cost. Because in this case, right, it doesn't matter to us whether we sell it at a high price or sell it at a low price. At the end of the day, right, it's usually a product that is something that gets sold very, very quickly, and it's an abundance of. So a great example would be a water bottle, okay? So every store that, carries water bottles, right, they don't care too much to sell this batch first or this batch last, because in this case, water bottles, they have no expiration date, right? They have no shelf life. All they have is just who buys them, right? And it doesn't matter which pallet comes first or which pallet came last. In this case, they're going to purchase the water bottles, and depending on, how they, purchase them, right? They don't care for how much price they bought it for, because at the end of the day, you're still going to sell it at the same price for the same amount. And in this case, it doesn't matter which bottles you purchase or which bottles you purchase last. They're all going to be sold at the end of the day. So in this case, that's a perfect example, is anything that doesn't have a shelf life. So water bottles would be a great example, because that's something that constantly is being purchased and constantly being sold. Okay. And the last one that we have here is going to be an inventory costing method. I do need you to know at least that it exists. When I ask you a question, what are the costing methods for inventory? You need to identify that specific ID is going to be one of them. However, I'm already teaching you 3 out of the 4. Because specific ID is pretty straightforward as far as in regards to inventory. Specific ID is where you have a specific serial number or specific manufacturing part that gets sold, all right? And a great example would be an auto repair shop, okay? Because again, an auto repair shop, right? If they can take any car that's out in the store that just comes in, right? They have to have a couple things, right? They have to have at least a few car parts. Usually they go by what the city usually has abundance of. So in this case, right, the inventory is going to be specific to a specific piece or a specific part. So in this case, if an auto repair shop, right, when a car comes into the shop, right, you have to take down the information, right? This is you need to know what the car model is. You need to know what year that model is. You need to know exactly what car brand that is and exactly what part that part belongs to the car that they need to replace. So a great example would be a 2019 Honda Civic, and they need a water pump, right? That is going to be the criteria for specific ID, that it is specified because based on car manufacturer, the model, the year, and the actual part, it's going to have a specific serial number or a specific manufacturing part number on it, right? Because in this case, right, this is a very specific item you must calculate in your inventory part. Not all generic parts can fit a specific car, right? You can't expect a water pump, a generic water pump, to be able to fit a Honda Civic and be able to fit up a Toyota and to be able to fit a Mazda, right? Because of that idea here where it's so specific, because every car manufacturer has a different brand and has a different quality, whatever it is, right? Different size tank, different model, right? So that's why specific ID is, it's an easy concept, because if you are able to understand that it's like an auto repair shop, then every time you purchase an item, right, it's going to be based on the actual specific car model, year, part, etc. Okay, so that's how you would calculate that type of inventory. Okay, not all parts are going to be equal, right? Depending on what do they want. Do they want the original manufacturing, or do they want a generic brand? Okay, so that's why specific ID is a little complicated, but it's kind of easy to understand if you understand it like an auto repair shop. But in this class, I am not going to teach you that, just because it's definitely a difficult processing, because, for example, an auto repair shop wouldn't necessarily have those items available on hand, just because, like I said, right, any car can drive up to the parking lot and say, hey, I need to get my water pump fixed. And what they normally do is they order it at when they, come into the shop and say, I need to get my part fixed. Okay, I'm going to order it now for you. So in this case, right, specific ID is a little more complicated than, than what you see in the eye, or whatever you call it. So in this case, I'm not going to teach you that. I'm only going to teach you these three here, which is FIFO, LIFO, and weighted average / moving average, okay? However, specific ID exists, okay? That's all I need you guys to know. So for today, this class, right, for 5.3, we're going to take a look at the very first method, which is called the first in, first out method. Okay? 5.4, which is tomorrow, we'll take a look at LIFO, and then on Monday, we'll go ahead and take a look at 5.5, which is the weighted average. Okay? Now, of course, FIFO, let's go ahead and take a look at what these computations or formulas that you do need to know when you are going to be calculating the cost of your inventory items, okay? So in this case, right, we have the purchase price, okay, which is going to be your quantity times the unit price that you purchased the item for. We also talked about total cost, right, which in this case, we're only looking at freight cost, okay? So your purchase price plus your freight is going to give you your total cost, right? Then what you're going to do is, because you are trying to have your customers be able to cover all the costs in order for them to obtain that item, you're going to calculate what's called a cost per item, where you take your total cost and you're going to divide it by your quantity of that batch to get your total cost per item, okay? And then we're gonna talk about goods available, which is going to be your beginning inventory plus your net purchases, which be the cost of goods available. So we'll talk about that when we look at the actual inventory worksheet. Okay, and we're gonna talk about cost of goods sold. Your cost of goods sold will depend on what the situation is. Easiest way to be able to figure that out is by taking your goods available, minusing your ending balance, and you should be able to determine your cost of goods sold. Okay. Now, key factor here that you do need to know is that when we actually take a look at our example, right? Since we're using periodic method, right? Our key notion is that we will find out what the ending inventory is at all times because someone has to physically go down to the basement and take a physical count of inventory. Okay? So that will always be given is that you will have your total cost of goods sold or your SR, you will have your total ending inventory because someone's going to physically go down to the basement and tell you you only have X amount of items left in inventory. Okay, so ending inventory will always be given. Okay. Okay. And okay, so here we're going to take a look at an example. Okay, so this is what we learned Monday, where we take a look at the problem, which is right here on June 1st. You made a purchase of 100 toys for $1.25 with the freight costing you $25, right? This is what we're going to do. We're going to practice. We need to be able to journalize it first so then our books have a record of making this purchase. Okay? So that's exactly what we're going to do. We're going to do a purchase expense for $125 because we purchased 100 toys at $1.25. So that gives me a grand total of $125. And then we're going to have a freight cost of $25, which is going to be right here to give me my grand total that I owe to be $150. Okay? Once we've journalized that, that's where we need to place it into our inventory worksheet. So we plug it in just like this, right? We're going to plug in that on June 1st, right? We purchased 100 toys at $1.25 with the freight costing $25. So this is where our formulas come into play. We need to determine our purchase price, right? So first one we have here is quantity times unit price, which we already know because we calculated in our journal, right? We take the 100 items, we purchase them at $1.25 to give us a total of $125. Now the next formula we have to figure out is what is my total cost? In this case, we know that the formula for total cost is going to be my purchase price plus my freight. So in this case, $125 plus $25 gives you a total of $150. Okay. And then here is the next step here where we need to determine what the cost per item is going to be. So in this case, right, we have a total of $150 in cost. That's my total cost. I'm going to divide that by my total quantity, which is going to be divided by 100, which that means each item that I sell, it's going to cost me $1.50. Okay? Now, that's what it's going to cost me. Okay? This isn't my selling price. This is my cost price. Because when I'm doing my business, right, I need to make sure that I calculate my total cost, right, to make sure that when I sell my items, right, that means every time I sell, let's say one item, it's going to cost me $1.50 per item that I sell. Okay? So in this case, that's exactly how I have to treat it because that means every time I sell a toy, it's going to cost me $1.50, right? Even though I originally purchased it for $1.25, I need to take the freight and spread it across so then my customers also pay for the cost it took me to pay for the shipping on top of that. So that's exactly where that $1.50 comes from, right? This is the price that it's going to cost you to sell one toy. Okay? Any questions here? Okay. So then, right, scenario number 2 says that on June 11th, you end up purchasing an additional 100 toys, okay, for $1.28 with the freight costing you $26. Okay, so here, purchase expense. I bought 100 toys at $1.28, so $128, plus my freight of $26 to give me a grand total of $154. So that's exactly what I'm going to do. I'm going to plug those numbers back into my inventory worksheet, okay? Because now I made an additional purchase of inventory, okay? So here I plug in my 100 toys. I plugged it in for $1.28, which gives me a total purchase price of $128, plus my freight of $26 to give me a total cost of $154. Now I need to determine my cost per item. In this case, right, it's going to cost me $1.54 because 154 divided by 100 gives me $1.54. Okay. Now this is exactly how I'm going to be looking at my inventory. I have 2 batches of inventory. Okay. If I'm using Fifo method, that means I'm going to get rid of my very first batch here, which cost me $1.50 each. And then I'm going to go ahead and once I get rid of all of those 100 toys, then I can go ahead and move into my second half, which is going to cost me $1.54. Okay? So that's the idea here, right? If you want to pretend these toys are milk, right? You could think of it that way, right? You have to get rid of your first batch first. Okay. So then, now once you've done that, right, we already know that the scenario says that on the 15th, I have X amount of toys left, right? So the goal I have to do here is I need to tally up all my total inventory items I have available, right? So I add my totals up. So I already know that my first 100 plus my second 100 is going to give me a grand total of $200. 200 toys. And then, of course, I need to also add up my total purchase prices, right? So 125 plus 128 gives me a grand total of 253, plus my total freight, which is 25 plus 26 equals 51. And then, of course, my grand total cost is going to be $304, okay? Now, why do I need to do these totals? Because in our inventory worksheet, having these grand totals is going to help us fill the second half of the inventory worksheet, okay? So, these 4 numbers, okay, once you've calculated those, this will help you go ahead and fill in this section right here. So as you can see, my purchases, right? I purchased 200 toys, okay, at a total of 253. That's my purchase price right there, okay? We will talk about returns and allowances next week. But in this case, I don't have any returns or any allowances, right? And then the next section here is going to be my subtotal, which we know, right? That's just given if you had a return or not. And then I have to add my freight. So in this case, freight doesn't change my quantity. It changes my total cost. So I have to add my freight of $51, okay? And this is going to be my net purchases. So in this case, I have a total of 200 toys costing at a grand total of $304, okay? Once I have this section filled out, that's where I'm going to go ahead and continue on filling out the rest of this worksheet, okay? We're going to start with the beginning inventory. So in this case, right, since we're starting inventory as if we're starting fresh, right, we don't have any beginning inventory. So that's going to be 0, right? we don't have any beginning inventory. Then the next section is that, well, my net purchases was something I pulled from the very top of my window, which in this case, I know that I purchased 200 toys for a total of $304. So in this case, I plug that in here. And my formula, if you remember, right, my total goods available is going to be my beginning inventory plus my net purchases, which right here, my total goods available is going to be the 200 items that I have for a total of $304. Okay. So once I get there, then the next step here is now I'm given this piece of information that on June 15, I had a total of 80 toys left in inventory. So that means on the 15th of June, someone went down to the basement and they counted that you had a total of 80 toys available. So your assumption here is, in order to find out how many items that you sold, so cost of goods sold. So if I started out with 200 and I have 80 left in inventory, my assumption here is I'm going to subtract those two numbers to get me a grand total of 120 toys that were sold, right? Hence that formula where we take our goods available minus our ending inventory to get our total cost of goods sold. Okay, so in this case, that was just the quantity. Okay, so now we finally have figured this number out that we sold a total of 120 toys. Okay, so this is where the calculation is going to come into play. Okay. So first, let's go ahead and take a look at how many items we actually have left on our inventory, right? So in this case, right, we have 200 toys available, okay, right? We have one batch for $1.50, which is 150, and our second batch of inventory for 100 at $1.54, which is a total cost of 154. In this case, this is where we're going to build our little table to help us calculate our total cost of the cost of goods sold. Okay, so if we sold 120 items, right, our first batch of 100, right, which in our first batch, we already know we're going to get rid of 100 items. So our first batch that we're going to take a look at is going to be our batch for $1.50, which in this case, since I'm going to get rid of the whole thing, my assumption is I'm going to take that total of 150 and I'm going to put that into my cost of goods sold. Okay, so therefore, I get rid of that first batch of inventory. Okay, now in this case, right, I still have to sell 20 more items. So this is where I'm going to have to physically calculate each cost per item because in this case, I'm taking a small portion of it. Out of the 100, right, I'm only taking 20 of those items. Okay, and if those 20 items is going to cost $1.54 for each item I sell, I have to physically calculate it right here, right? 20 times $1.54, which is going to give me a grand total of $30.80. Okay? So once I figured this $30.80, I'm going to go ahead and combine these two together because I sold a total of 120 toys. So I'm going to take my 20 plus the original 100 that I purchased, right, to get me a total of $180.80. Okay, so therefore, my inventory on hand is going to reflect that I should have 80 units left in my inventory at $1.54, right? Which, it's either you solve it that way, or if I know that the cost of goods sold is going to be $180.80, right? If I take my goods available of $304 and I subtract out my $180.80, I'm going to get $123.20. Or, right, if I solve it the other way, right, take my 80 items, times it by $1.54, that's the same thing. I'm still going to get $123.20. Okay? And that's how I solve for the ending balance or my total cost and my ending balance. So this number here is important because this, right, your ending balance of a given accounting period is going to become your beginning balance for the next accounting period. Okay? So in this case, I solved here. I solved the numbers I needed to solve for, which is my cost of goods sold and my ending balance. So in this case, right, these numbers should equal to your cost of goods or goods available. Okay? I have 200 toys at 304. Okay, if I sold 120 toys at a total cost of 180.80, then I should have 80 toys left costing at 123.20. Okay, and that is how you use the FIFO method to calculate your cost of inventory. Okay, so notice this. Okay, that you started from the top and you made your way down to the bottom of the list of your inventory on hand. And then here I've calculated, right, in a list just like that I'm going to get rid of my very first batch of 100, and then I'm going to go ahead and see what else remaining I need to have left to sell and calculate it per item in this case. Okay. Any questions here? Was that no?
No, I understand what you explained. You reflect that on the first, how you call that, the first, not column, the first oh, sheet is the net purchase and you have a quantity that, and on the other side you have an inventory. How do you reflect all of this? I don't understand. You're writing there all what, you know what I want to ask you? I just don't know how to.
In this case, right now, I'm just explaining the concept. It will make a lot more sense when we actually use the inventory worksheet to actually solve for the problem. Okay? So maybe your question can't be asked to be answered now, but when we do the actual exercise, it might make more sense to you.
Okay, no problem.
Okay. Okay, so any other questions in regards to understanding FIFO? We had 2 batches of inventory. We start for the very first batch to get rid of it, and then we dip into the next one if we sold more than what we had in originally. Okay. So we also talked very briefly about how periodic inventory, right? If we recognize all of our inventory items as expenses, what happens is that now that you know how much inventory items you have available, and of course you sold some along the way, you need to create what's called a conversion entry. Because at the end of a given period, you must have a conversion entry to reflect your ending inventory, but at the same time also reflect that you sold some of those toys, okay? Because your purchases says that you have 200, but in reality you don't because you have 80 left on inventory. You sold 120 of those items along the way. So in this case, right, we're taking a look at this example here. That's what you have to do. You need to recognize your ending inventory, and you need to recognize that you sold some inventory along the way, and you're going to zero out those accounts that you had in your purchase expense because that's what you're essentially doing. You're converting your purchase expense into inventory and cost of goods sold. Okay? And that happens when you take a physical count and you complete your inventory worksheet. So, once again, when you do that, right, we already calculated those figures. We know what those numbers are, all right? Right here, right, we know that our ending inventory, right, was 80 units or 80 toys costing at a grand total of $123.20. So you plug that number in right there, okay? Second thing that you know is here that you have a cost of goods sold. which you know because that's what you calculated, right? You sold 120 items for a total of 180 cents, right? Your purchase price or your purchase expense, right? We know what that is because that's what we calculated, right? What was our original purchase? We purchased 200 toys at a total of 253, right? Purchase price, right? That doesn't include the freight. Okay, so in this case, my purchase price was 253. All right, and then of course we're zeroing out our freight expense because that's included in the cost of inventory, right? So in this case, right, we also have to recognize our freight expense, which we know was a total of $51. Okay. Any questions here? So this is basically once we finish our worksheet, we have calculated all the numbers we need to piece it together in our conversion entry. Any questions?
Nope.
Okay. So once again, we talked about the ending and the conversion entry here, and then we talked about the purchase price or the purchase expense and the freight expense, which we take these directly from our inventory worksheet. Okay. Shh. So now that we have that idea going on there, right? Now let's talk about what happens when we actually have beginning inventory. Okay? Because remember, our ending inventory from the previous period is going to become our beginning inventory for the next period. Okay? So in this case, right, we have this scenario where on June 15, you had an ending balance of inventory on hand for 80 units or 80 toys, costing a grand total of $123.20. Okay, so this is where that little inventory on hand section is going to be placed. Okay. Now, when we talk about filling out our inventory worksheet, right, as we go through each column, you're going to notice that there's places where you need to put certain things, okay? Anything that you purchase is going to be in that purchasing table, which it will make more sense when we actually do the exercise, okay? So here, right, our next scenario is that on the 18th of June, right, we decided to purchase an additional 100 toys, but this time it cost $1.27 with the freight costing $25. So once again, we're going to plug those numbers into our inventory worksheets. Okay. So we plugged in both scenarios in here. Right? We plugged in our 100 for the $1.27, and we also plugged in our other scenario for on the 21st of June that we purchased 100 toys at $1.30. So once again, you're going to repeat, rinse and repeat. You're going to calculate your purchase price, your total cost, and your cost of per item. So in this case, right, first one we have is 127, right? 100 times $1.27 gives you 127, which we calculate plus freight to be a total of $152, right? And this is where we're going to need to calculate that it's going to cost me $1.52 for this batch on the 18th. Okay. Then the next batch that we purchased was another 100 toys at $1.30, which gives you $130, plus your freight of $26 to give you a total of $156. Okay, which again, if we calculate the cost per item, it's going to give you $1.56. Now this is my total net purchases. Okay, and when we do the inventory worksheet exercise, it's gonna make more sense on where we put in our beginning inventory, because our beginning inventory is very important, because it's part of my inventory. Okay? So in this case, I'm just only calculating my total net purchases here. So I'm going to solve my total. So total amount that I purchased is going to be 200 items at a total of $257 with the freight of $51 once again, giving me a grand total of $308. Okay? And then now let's go ahead and plug in those same exact 4 numbers into our bottom half of our inventory worksheet once again. So here, this is right here where we solve for our net purchases. Assuming there were no returns and allowances, right? We plug in those numbers exactly how I described it the first time around, right? Your total purchases was 200 items at $257, right? You had freight of $51. So now you have a total net purchases of 200 items at $308. Okay? Then this is where we plug in our beginning balances because remember, right? We had previous inventory balance beforehand, right? This is where we're going to plug in that 80 units, okay? And it for a total of $123.20, okay? We're going to carry down our net purchases of 200 items, okay, at a total of 308. Now, this is where we're going to use that formula, right, where we calculate our total goods available, which in this case, right, I'm going to add my beginning inventory plus my net purchases to get me my total goods available. So in this case, I have a total of 280 toys available to sell, costing me at a grand total of $431.20, which we're going to go ahead and pop that information into our inventory worksheet or inventory on hand. Okay. So once again, we were also given that on the at the end of the month, we had 60 toys available left on hand. Okay, so therefore, right, if I started out with 280 toys and I have 60 left on hand, therefore, I have sold at least a total of 220 toys, right? That's taking your 280 minus 60 to get you a total cost of goods sold of 220 toys. So now we solve for this. We now need to solve for the actual total cost of my cost of goods sold, okay? So now you're going to notice this. My inventory on hand has changed because now my ending inventory is become my beginning inventory. It's going to apply like this, especially if we're using Fifo. This batch we purchased from the previous balance, from the previous period beforehand. So this becomes the first batch of inventory that you still have left to the last batch. Okay, so in this case, this becomes the very first batch of inventory that you must sell first because this one was from the previous accounting period. Okay, and then the other two that you purchased, right, the one on June 18 and then the one on June 21st, right, in the exact order that you purchased it. So now, right, taking a look at my total goods available or my inventory on hand, right, this gives me that I have a total of 280 toys, right, at a total of $431.21. Now, just exactly how we were talking about and using the FIFO method, we're going to take away from the very first batch. And in this case, we're going to take our first 80 units and we're going to get rid of it. Okay? Then, once we got rid of that whole thing, because our goal is that we're trying to sell 220 toys, therefore, my first batch of inventory is already gone, which is I have a total of 80. All right? So how many more do I need to sell? Well, in this case, right, 220, right, and we sold 80 of them, I have what? 140 left to sell.
140, yeah,
Okay.
140.
So then here, I'm going to go ahead and dip into my second batch of inventory, which is 100 items. In this case, since I'm taking the whole batch, I can just get rid of that whole thing because I'm going to get rid of that whole entire thing anyway. So there go, I add my extra 100 right here, and that cost me a total of $152. Okay. Now, I only sold 180. I still need to get to 220. So in this case, I need to sell 40 more items.
40.
Okay, so there you go. I pop in my 40. I need to calculate it by cost per item, which in this case, right, I only have one batch of inventory left. And it's going to cost me $1.56 per item. So there you go. I calculate it right here. 40 times that 156. And I get a total of $62.40. Okay. And that is how we calculate our total cost of goods sold, because we just add up those totals, right? We sold a total 220 units at a total cost of $337.60, which you're going to pop that number in here, okay? Once again, we have two ways to solve for our ending inventory. It's either you take 60 times the 156, or you could easily just take your goods available and subtract your cost of goods sold to get you the exact number of $93.60. Okay? Right. Once you figure those numbers out, right, and we reach the end of the accounting period, we must again fill out our conversion entry. So in this case, right, the only difference here is that we have beginning inventory. Okay? We need to reflect that in this case, we're going to get rid of our first inventory batch. So when we get rid of it, right, we're going to credit our inventory account, because in this case, I'm getting rid of that $123.20, right? And that's exactly what we're doing here. We're going to credit that because those items have been sold already. Okay? So we need to get rid of that. Okay? And whatever our new ending inventory was is going to be entered in, right? That $93.60 is going to be plugged into there. Okay? And same thing with the cost of goods sold and the purchase expense and the freight expense. So all of this, once again, we took all those information from our tables and plugged it into the journal. Okay? Any questions here?
Nope.
Okay. So, once again, Chapter 5 review, we talked about what happens when we purchase our inventory, right? We need to recognize it as an expense, so purchase expense, freight expense, and however you paid for it. And at the end of the given accounting period, you must have a conversion entry, which, right, is where we calculate our ending inventory, our cost of goods sold, and we're going to be zeroing out our purchase expense and our freight expense, okay? If you want to understand it this way, right? When we purchase our inventory items, right, we're placing it in a bucket, okay? Now that the accounting period is over and we calculated all those numbers, what you're going to do is you're going to take those purchase expense buckets and you're going to dump them into either the inventory bucket or you're going to dump it into the cost of goods sold bucket. Okay? Because in this case, my purchase expense reflects that I have X amount of toys left, but in reality, that's not true, right? Because you sold some along the way. Okay? And that is it for chapter 5.3. Okay? So, yes?
Hold on, nothing. Sorry.
Oh, okay. So let's go ahead and dive right into our exercises. Okay? So, scenario number 1, okay, so this is 5.3 exercises, whether you downloaded the Excel file or the Word document, whichever one you decided, okay? I prefer you guys to just use Excel because it makes your calculations a lot more easier, but it also it allows you to produce, what do you call it, a little more accurate answers versus if you were to just calculate it by hand, okay? So in this case, right, number 1 is your inventory method is periodic and it's FIFO. Assume that all purchases were made on an account. So what we're going to do here is I want to practice, since we practice it on Monday, I want us to practice journalizing our purchases as we go and also practice our conversion entries, okay? So I'm going to make my journal a little bigger, okay? So that's what we're going to do. We're going to practice journalizing our scenarios and we're going to go ahead and properly fill them into our inventory worksheet, okay? So very first thing that we did here on April 5th is we purchased 1,000 units at $5 each with the freight costing $100. Okay, so let's start with the journal first and let's practice journalizing that. So on April 5th, what did we do?
Purchase.
We purchased. So what account are we going to use?
Purchase expense.
Purchase expense. Good. Okay. What else are we going to recognize?
And we have a freight.
Freight. Good. Okay. So in this case, if I purchase 1,000 units at $5 each, what is my total purchase expense?
1,000.
5,000. Good. What was my freight?
I don't know how much was. 100.
It was 100 items, right? $100, excuse me. So in this case, $100.
Mhm.
Okay? And so then, right, key information that you're supposed to have here is that assume that everything was purchased on an account. Okay? So in this case, how did I pay for it? Or what's the amount that I'm going to be calculating here? What's my total amount going to be?
5,100.
5,100. And then what account number or account name am I going to use? How did I pay for it?
On account.
Okay. Good. Okay. And here I'm going to throw in that I'm going to put a description here that I purchased 1,000 units at $5 each. Okay. So now let's go ahead and plug those into our inventory worksheet. Okay. So here we have, I'm going to explain it real quick on the sections. So first section that we primarily see is going to be this top half, which right here, our majority section is going to be our net purchases, or in this case, it's our purchase expense, okay? On the right side, right, the last 3 columns, you see your inventory on hand. This is where your beginning inventory will fall into place. So as we are making our purchases, we will not be using this section down here, up here on the right, okay? This is only reserved for beginning balances, okay? And then the bottom half is the calculation that we are going to be calculating our works for, right? In this case, right, the left section, the first 3 columns here, is going to be calculating your net purchases as well as your ending inventory, goods available, and your cost of goods sold, right? You have your total quantity and your total cost, okay? Then the middle section here is your quantity, cost, and your total cost. This section is where you're going to reserve for your calculations. So when we figure out, oh, we need to take out this batch here, this is where we put it here. So then we can make sense of which batch came here and how we're going to calculate it, okay? And then the last three sections here, which we'll talk about next week, is in case there is a purchase returns, an allowance, or a discount, right? We won't talk about it until next week. So again, I just want to make sure that you understand how to fill this table out. As you make your returns and your allowances, that's where you're going to plug it in this little column here on the right, bottom right, okay? So let's go ahead and plug in our first batch of inventory. So in this case, we purchased it on April 5th, okay? We purchased 1,000 units, right? And it cost me $5 each, with the freight costing $100, okay? So what I did for you guys here is I left it blank. So then you guys can format it however you like to format it, right? Whether you like to use accounting style where you have the dollar bill sign there. You can use currency style, which gives you the dollar bill sign on there, but it's just closer to the number itself. If you think that this dollar sign could be distracting, right? Oftentimes, I sometimes confuse it if the window is really close and your numbers are squished together. It kind of looks like a 5, so I actually prefer to use common style, which gives you just the decimal places up to two decimal places. So in this case, it gives you your cents right there. And that way, right, I don't confuse that dollar bill sign as a 5, okay? So in this case, I prefer it that way, okay? It is up to your discretion how you want to have your cells formatted, okay? Now, in this class, right, we are supposed to actually have taken Excel or at least have basic knowledge of Excel because, once again, we are doing manual bookkeeping, but to kind of make it go a little faster, instead of handwriting everything, we're going to use Excel to punch in formulas so then we can go ahead and calculate this a lot quicker. All right? And the very first formula we have here is going to be my purchase price. Okay? So here, right, my formula for my purchase price is going to be my quantity times my unit price. Okay, in this case, right, I'm using cell referencing and I'm not entering in, multiply these two numbers together. I'm just using straightforward symbols that are above your number key if you have it. If not, it's your shift keys, okay? So in this case, I'm typing in here that I want to figure out my total purchase price, which is my quantity times my unit price. And in this case, it's going to be cell E6 multiply, which is the star, my B6 times my C6. Okay? And of course, in order to activate your formula, you need to start off with an equal sign. When you're done with your formula, you're going to use your enter key. Okay, so therefore, I get a grand total of 5,000 units, or $5,000 for my purchase price. Okay. So the next formula I'll be talking about will be my total cost, which is going to be my purchase price plus my freight expense. Okay, which in this case, 5,000 plus 100 gives me a grand total of 5,100. Okay. Then the next formula we have here is going to be my cost per item. In this case, right, I know what my cost per item is going to be. It's going to be my total cost of 5,100, and I'm going to divide that using my backslash. Divide that by my total quantity of 1,000. Okay? Now, If cell referencing isn't something that you want to do, then yes, you can type those numbers in manually if you'd like. It will give you the same results. However, if you do use that, you would have to actually punch in every single number for every single calculation. If you use cell referencing, right, we have a nifty feature called the fill tool, right, that allows you to copy the formula that's in this cell. And if I were to drag it down to the next cell, it will apply that exact formula in the next cell. Okay? So we'll do that example for in the second round. Okay? It's called the fill tool feature. Okay? So there you go. So here I've already calculated that it's going to cost me $5.10 to sell each item. Okay, so for a total of 5,100, for every item that I sell, it's going to cost me $5.10. Okay. Everyone good? Okay. So let's go ahead and dive right into our next scenario. On April 10, we decided to purchase an additional 750 units at $5.75 each. Okay? And the freight cost me $75. Okay? Now in this case, let's go ahead and practice journalizing that once again. Okay? So again, with